Awesome. Thank you, everyone, for being here today and for attending the Cornell Blockchain Conference. Today, we'll be hosting the VC panel, which I'm excited to moderate. My name is Yusuf Kwam, and I am the head of our Accelerate program. And so it's really great to be here today. So really quickly, we'll start with brief introductions. So if you could talk a little bit about what got you into crypto and then the firm you're representing, and then we'll go straight from there.
Great to be here today. My name is Carl. I'm a partner at Six Man Ventures. I've been in crypto full-time since 2020. For me, I was a product manager at Google, looking to pivot to a startup. Found a really fantastic opportunity at Paxos, a regulated blockchain infrastructure company based in New York. And after that, never looked back and been in the industry for 4 years. I joined Six Man Ventures in 2022.
Yusuf, thanks for moderating. Great to see everyone. Thank you for hosting this. I'm Parth. It's like Darth Vader with a P. I first actually got into crypto because I was trying to buy a fake ID using Bitcoin. So some of the regulators were probably a little bit correct on there. And then did some consensus mechanism research. And I started my career actually as a product manager at Uber, so much in Web 2, understanding marketplaces. Left, started a fintech company. We're trying to do decentralized hedge funds, went through YC, raised some money. Really hard to build fintech products in Web 2. And that was kind of the piece for me that would show that you can actually use crypto to build really meaningful things from there. And then after that, joined OpenSea as employee number 25, was the first PM there. That was an amazing ride for 2 years, led a lot of our fiat on-ramp, multi-chain efforts, API protocol, and then switched to the investing side last year. And I'm at Bain Capital Crypto. We're like a $560 million crypto venture fund.
Hello. My name is Holyn. Thank you so much for having us. I read the Bitcoin white paper in 2017, and I actually joined Twitter shortly thereafter. And while I was at Twitter, I was just doing a bunch of research on the entire just crypto industry, ETH, Bitcoin, etc., which led me to actually launching a social token, personal social token in 2020 with a friend of mine who had a social token infrastructure startup at the time. And I was just so excited about crypto that I left Twitter in late 2021 and got to work with a variety of crypto startups. And then after doing that for a year, I joined Kindred Ventures. We are a seed stage generalist fund, but we are thematic and research driven, which means that one of the areas that we invest in is crypto. And so we've been pretty active in crypto for a very, very long time. And yeah, that's us.
Awesome. Oh, that's a lot. Yeah, so let's get started with what your current thoughts are for this current cycle, and then what kind of projects you guys are looking out for.
All right. So I'm actually really curious to hear what everyone says about where we're at in the cycle. Obviously, we're in some percentage away through the bull market. My general view is that the second half of 2024 is going to continue to be optimistic. It might not be like 2 to 3x from here, but I think things will continue to at least stay flat, if not increase over time. I don't think we're due for an extremely large correction in the second half of this year. I know some people are more in the camp of we're towards the tail end of the bull market. My thing is, interest rates are still high. I think interest rates have been higher for longer. That I think by far is the primary driver of the value of crypto assets, or risk on assets, of which crypto is obviously considered as one. And so I think until we start to see interest rates really start to meaningfully decline or have strong inclinations that inflation is under control, I think then we're actually going to really hit the full stride of the bull market. So I think we're climbing, and I think we might be flat for a while, but certainly I don't expect a very large drawdown. In this part of the cycle, where we're at is we've always been historically like very consumer oriented at Six Man Ventures. We invested, first check into Magic Eden. We invested in STEPN. So all of our backgrounds as well tends to be very consumer focused. And I think in the bear market, it's really hard to invest in consumer because by definition, you need to get users to iterate on the product. And in a bear market, there's very few active users actually engaging in crypto. So I do think now there's enough retail interest in crypto where you can actually start to really build a consumer product, get meaningful feedback loops. So consumers very much, I think, an area we're focusing for the next 3 to 6 months. Other areas include Bitcoin. We've made a number of investments over the past 6 months in the Bitcoin ecosystem. I think those are going to take a while to play out. I think as we saw with runes, people are super optimistic on Bitcoin, but this is a long-term play. It's not going to like fully play out over the next year. And I'd say the last one for us is DePIN, or decentralized physical infrastructure. It's an area where thematically we're extremely aligned. We're token research engineers fundamentally, and the design of DePIN networks is, I think, core to our thesis and our investment area. And I think we really have the opportunity to reshape the physical infrastructure landscape over the next 2 years through a number of exciting products that have been launched and are continuing to be launched.
So like Carl, I actually don't know where we are in the cycle. I think prices go up, prices go down. I don't know. I think what is important though is seeing where we've hit points of maturity. So I think you're finally starting to see a lot of crypto infrastructure actually bake, right? Even if you look from just like 2 years ago, like you actually have more L2s, L3s, things that work, you have fraud proofs that are live. And so I think you actually have the building blocks and materials to actually do more meaningful things from there. And that's actually what's very, very exciting. I don't think we're done there. I think there is going to be a whole next generation, and I think you have extremely really smart technical founders who are kind of going and thinking about that side as well. One thing we've been excited by is like I think we're seeing like pretty dramatic improvements in like cost and speed for like ZK proofs, and I think that unlocks a new design space. I've sometimes always viewed crypto as like, here's what you can do, and I think people try to do too much outside of it, and then you have like you have more info that gets baked into it, and then you have more applications come out of it. And so it's been very interesting to just kind of see the evolution of some of these things. And I saw that a little bit at OpenSea. There's a lot of things we wanted to do, we couldn't do, and then suddenly like a year later, it actually made sense to actually go about doing this. And if you look at embedded wallets and things like that, which is pretty exciting. Things that I think I'm personally excited by, I think you're starting to see real product market fit with stablecoins. Depending on where you're coming from, I think sometimes it's overstated, like where everyone's like, oh, everyone's using it and it's there, and other places it's actually understated, right? And there actually is like actually real usage on some of these things. And so I think you have to be very realistic what it is, but clearly you're seeing a lot of things that are happening there. Unsurprisingly, I'm still pretty excited by NFTs. I think you're going to see brand new design paradigms that kind of come from there. I'm very, like before, I think the first generation of NFTs was like token URI points to like an IPFS link, and I think you're going to start seeing interesting evolutions come out of that side as well. Pretty excited going back to the ZK topic. I think you have a lot of data modes, and I think ZK again is verified messaging and how you actually have more liquid data go from places to place. And then finally, I think I'm like, my background is marketplaces, and so I'm always interested. I think DePIN falls into this category of how do you actually build real world marketplaces using crypto incentives. And I think you have lower cost of capital. You actually can fund people. If you look at any fintech product, like cost to value and getting dollars to is really, really important. And so I think you're starting to see the evolutions on those kind of things. And so that's that. But of course, I think founders are the ones that are really on the cutting edge and will tell us what's most.
Yeah, I mean, I think we're in a very, very optimistic place in the market. Obviously, on the institutional side, with ETFs and stable coins, I think I'm really, really excited about, especially ex-US. And then on the more, I would say, consumer side and just builder side, there are a lot of things that are exciting that are happening with Base, with Forecaster, with ZK Syncs, as you mentioned. And so I think generally the market is very, very optimistic and people are still building. And so that gets me really excited about a lot of different things. But I would say the things that my mental model is, the first part is identity. And this is identity for people. Obviously, so consumer social falls into this bucket, and how we create our identities online in a way that's interoperable and can be kind of taken as a data pack across the internet and maybe also in real life. And then the second part, I think, is what people would classify as DePIN. We are really huge hardware investors at Kindred. And so some of the things that I've been thinking about is devices, especially devices with sensors, robots, and how actually protocols can be used for not only communication, but identity infrastructure in that case, to bridge both online agents and IRL agents, which again happen to be robots. And then the second aspect of that is commerce. And so been thinking a lot about stablecoins, again, especially ex-US, and some of the ways that those can be used not only for payments, but for also just peer-to-peer. And then secondly, thinking a lot about, I guess, e-commerce and how, with GDPR and a lot of the data regulation that's going on across the world, and then also the increasing costs of Facebook and advertising online, how can we actually use NFTs and other things that are on chain to actually create really great networks, perhaps a new kind of advertising network that's open and can actually be owned by individuals. And so a lot of different things, but typically, again, identity and commerce is the way that I typically like to think about it.
Awesome. I think everyone here so far has touched on the consumer space, so we can talk a little bit about that. So what's exciting you in the consumer social space, and then what companies have you noticed are executing well?
So I guess my general consumer thesis is is fairly straightforward. I think consumer products need to increase people's meaningful social connections and make people money. And if we're able to do both of those, you have the ingredients for an outstanding product. I look at like things that have historically been successful. Again, I think Acceptance is one example of that brought in a lot of people. Axie Affinity, although there was like issues with I think the long-term sustainability, like it was a social game, it brought people in, it allowed people to make money. And so if you have both of those, I think that's a really foundational piece. I think we're going to talk more about meme coins later, but like meme coins fundamentally are social, and they fundamentally allow people to at least speculate, make or lose money. But that speculation and wealth effect is really critical. And so with that, I think that's the framework I use to look at what are successful consumer companies. I think one of the things that most consumer has not cracked yet is sort of that daily interaction. I think wallets actually have the opportunity to be incredibly powerful consumer experiences, but mostly are just financial utility apps that help me to sign financial transactions. So I think getting your consumer product that when users wake up and when they go to bed, you're one of the first things they touch, that's like the early ingredients for a very successful product. So with that context, I think a couple of areas that are really exciting to me. One is what I'll say incentive-based games. So like an evolution of STEPN that I find really interesting is something called Moonwalk, not an investor, but just it's an interesting product. Who here remembers when the American Heart Association said, hey, you should really get 10,000 steps? Does everybody remember when that became a thing and people were like creating groups around getting your steps? Well, they basically do the exact same thing on chain, but you can actually enter pools of people and put in like a little bit of social capital, like, hey, $10 and it's for a week. And whoever does complete their steps gets the pool from those who didn't. And so those very simple economic incentives actually, and the social connection you get from being in a pool actually like have seriously motivated people to walk more. And that I think is really just showing the power of crypto. So I'd say incentive-based consumer apps is definitely one area. I think rewards and loyalty in particular is ripe for innovation. Now, it's a really crowded space. There's a lot of teams building here, but ultimately somebody's going to win because I think we all agree getting repeated emails from Sweetgreen to go buy salads is probably not the best way to do rewards and loyalty. And there's a way to make it way more fun and maybe even allow people to exchange rewards with others, right? And blockchains are the perfect primitive to do that. And I think lastly is gaming. I think gaming has actually not been talked about much in the VC circles. The past 3 months, I feel like everyone's focusing on other areas, but gaming is definitely one of those categories that can truly bring millions of people into crypto potentially overnight if it's being launched by like a AAA class game. And so with that, I think gaming will be a monster at some point in the future. Gaming's been a pretty big letdown overall in the sense that everyone's saying big games are launching, and then like we get to the end of the year and it's like big games are launching, but it's always like 1 year later. But I do hope that we're getting pretty close to some of those big games actually launching and creating a meaningful impact in users having a wallet. And oh, by the way, when users have a wallet, then that's the hardest part. Then they can do all these other things on the permissionless network.
Carl, are you more excited about games that completely mask crypto or games that really lean into it, like your Dark Forest style things?
I think lean into it. Because again, my thesis is social connections and people to make money. And so I think games that completely mask away the crypto, it's like, why build it on crypto? It's like, so it's harder to build in crypto today than it is in Web 2. So if you're not using the crypto in a like meaningful way, it's to just build a Web 2 product. So I think leaning into the unique aspects of crypto is the games that are going to be the most adopted and the most successful.
So actually one of my, the consumer company that I was going to talk about is somewhat of a gaming company. I don't know how many of you are familiar with IMVU. It is an avatar-based social network and game. It's very similar to The Sims, Roblox, etc. And in 2021, they actually launched their own in-game currency on chain. I think it's a ERC20. And so that is a token that they've been using for years now. And people can actually off-ramp it, if they make a killing or something like that, and actually use it in the real world or in, whatever other NFT or meme coins they want to purchase that day. And I think the most impressive thing about IMVU is the fact that it's, I think, 1 million DAUs and 100 countries across the world. And so there are a lot of people interacting with crypto already. And I think that's just like a very interesting way to meet people where they're at and use infrastructure that is essentially going to make the experience much more seamless for the user. And so it's already happening. It's just an existing game that has decided to become a crypto company in a very, very quiet way. That actually delights the users. They love it. Yeah.
On consumer, I think it's really hard to predict consumer behavior, right? I think like if you historically look, it's very much catching lightning in a bottle. What I think is more consistent is looking at consumer business models, and this is one place where I spend a lot of time. One thing that you're starting to see, if you're a consumer company, like we saw this at OpenSea, if you produce a lot of data and you have a lot of primitives, there's not great ways to capture value. And everyone came into crypto and we're like, hey, okay, we can have like an open database, anyone can build on top of it, but it's actually very hard to capture value on this. And there's been a lot of examples where you actually made it too open and then you got vampire attacked or different things happened there. And so like one thing I've been thinking a lot about is like, okay, how do you actually have defensibility for some of these consumer businesses? And how do you not just have it be a flash in the pan? And the one area where I'm starting to see like fragments of this, which is very interesting, is both at the protocol level, but also more interesting at the chain level. And so, for example, like we're large investors in WorldCoin, and WorldCoin just launched their own chain, and you can actually build things on top of it, Sybil resistant. But what's also real, and then you also, if people are in the forecasted ecosystem, you've seen DGen launch an L3, and I think there's a trend to come here. And it's really interesting to think about what happens here. So like 2 years ago, multi-chain was very much about usability and scalability. It was, hey, we want faster, cheaper, that's what we want. And I think it's still true today. I think it increases the experience there. I think the next driver is actually going to be more economics, because if you're an application and you produce a lot of data and primitives, if you keep it at the chain level, you can actually monetize the read functions that happen there. Or sorry, the write functions. It's harder to monetize the read functions on there, but if it's on your own thing, you have sequencer fees. You're seeing Base generate a lot of sequencer fees. DGen, the L3 generates a lot of sequencer fees. You might have a token be a unit of account. And so I think what's pretty interesting to me is that I think you're going to see a new business model emerge. And you can actually enshrine the economics of your consumer application at a more core protocol level. And that actually encourages you for people to build on top of it. Because previously you wouldn't want to, because you're like, I can't capture any of that value. But if you're like, I don't know, if you have a popular things, you have users, people are on your chain, they're doing different stuff on it. I think you'll see a lot of really interesting people start building on it. And then you as a project are actually incentivized to have everyone build on top of you, because you can just capture the value at a more like deeper rooted level. So for me, consumer, I think like, again, I think the prediction, like getting the consumer behavior is extremely right, but I think you always see consistent business models historically. And that's one I'm like pretty excited to see emerge.
I think it's a really good point. And like, I think Base is you mentioned this, like the perfect proof point of that. So I do think as if you're an enterprise and you're figuring out how do I enter crypto, before it was maybe I partner with a public network. I think in the future, it's going to be increasing. I'm going to launch my own app chain, where I get better control, I can capture more of that revenue. And then it's just like a developer ecosystem, play that you're making rather than, and then the economics are built in rather than I need to build a business model on top of that. As long as I can get the developers there, like I'm going to be able to have a sustainable and in Coinbase's case, rapidly growing source of revenue.
And because of that, you're willing to open up all your data sources. Like if you also own the client side, right, and you're producing a lot of data, right, you're going to put it on chain and you're going to put it on your own chain because people can build on top of that. And I don't actually think that was true. Like I remember at OpenSea, we used to struggle with this question. Like we had this API and we're like, do we use it? Do we not? Like we have this option order book. It was actually a very difficult challenge because we're like, okay, our value prop is in this option order book. And I think like this next generation of companies that you're seeing, they're like, okay, that's great. We'll just put it on chain, do whatever you want on it. And we'll monetize maybe on the sequencer level, or it's our token will be a unit of account. Maybe you have an enshrined DEX in there. And so I think there's gonna be a lot of creativity on that side.
So one more point. I totally agree. Like 2 examples of that that come to mind are, by the way, we didn't plan this. It's just like, we had just like good conversation. The first is identity. Like there's a lot of teams 2 years ago trying to build identity solutions, right? And like somehow they're going to try to monetize that. And like very few have actually been able to monetize it. But now Coinbase came out with their own identity product. But to your point, it can be free. And so now if you're a developer, you can get an identity stack as part of the base development kit, more or less, and with access to millions of users. Same with Coinbase Commerce when they launched a number of years ago. I don't know if that product really caught fire at any point, but now instead of trying to like, oh, we need to build a middleware product that's going to integrate with these chains, another way to do the commerce is just literally capture it through the transaction fees, right? So all these products that before you had to try to independently monetize, if you do have your own app chain, you can offer those for free and then use them as an incentive to get developers to build on your network, where then you're going to capture fees just through activity.
I'm curious how you guys, because I mean, this has been done before with Dapper and Rally and a few others. And ultimately, obviously, Coinbase is going to have a lot, it's Coinbase. So like bridge that gap for me.
Yeah, I think in the way we think a lot of our consumers, that I think you actually also need to own a little bit of the client side, right? Like I think when we looked at WorldCoin, it's like they are the best user of their infrastructure. And I think honestly, Farcast or WorldCast has done a really good job. Like if you look historically, like Uniswap is another great example. Like you own the protocol and you own the front end, right? And I think if you're not the best user of what you're doing, then it actually may not make as much sense in some ways. And I think like when we look at Dapper Flow, I think their risk, and I don't know the full story, was that they went general purpose a little bit too fast. And I think you're seeing a lot of different L2s that are thematically based, and they're like, oh, we're doing it for this, for a gaming chain or consumer game or something like that. And I think you need to be a little bit more focused on it and like opinionated, right? And actually like, and then you look as any normal business where you have to go get users. You have to think about, are you solving something for them? Are you actually a meaningful part in their lives to actually bring them into your things? For me, it's just more like this is a better business model long term that's much more defensible, because I think that's been one of the harder parts in consumer, at least in crypto that I've seen.
It's the same for Web 2. So consumer is just hard.
Yeah.
I want to touch back really quickly on individual economic incentives. So specifically with airdrops, I would like to know how you get real sustainable growth and activity that's not some sort of farming from airdrops.
Yeah, so we publish a number of pieces on token economics, and so we actually have one coming out next week on airdrops. But just like spoiler, some of the early data. So we looked at 40 airdrops that were conducted over the past year, and we sequenced them into a 2x2, where on the one axis you had a smaller airdrop as a percentage of supply versus a larger. So is it smaller than 10% or is it larger than 10%? And then the second one is the airdrop primarily geared to reward core users or to like acquire new customers? Right, there's a lot of airdrops that drop to NFT communities, et cetera, as a way to like get new users to their platform and create awareness, versus others like Jito are like, I'm only going to reward people who use the product. And so one interesting piece of data is we looked at, of the people who received airdrops, how many of them sold, held, or increased their position. And the only cohort that actually increased the size of their position was the ones that was a small airdrop to core users. And I think that it kind of like aligns with the thesis where, hey, if you have users actively engaged with the product and like know it, they believe in it, they've been using it, hopefully for at least somewhat organic reasons, they're going to be bullish on that product and therefore continue to increase, versus most others categories, people just default. Like literally 80% of people sell the token within a 60-day period, right? So I think airdrops farming is actually a good thing, and it's a part of the airdrop. As a protocol designer, the hardest thing mostly is to generate demand, right? The hardest thing is to get people to use your product. I mean, a lot of us are product managers. Getting people to use your product is hard. And so when you have points in an airdrop, you essentially give people the economic incentives to risk their time and capital to try your product. So your goal during that points period or leading up to the airdrop is to test the iteration of the product as much as possible and make it really, really good. So that way, after you do your airdrop and maybe like, future leaks of rewards over time, the product is so good that people just want to stay and keep using it. Right? Like Uniswap did an airdrop, but it's still such an easy product to use that it's still the default behavior. And then, there is some capital that kind of switches between dexes, but a vast amount of people just continue to use it because it's a great product. So I think the question is, farming is a feature, not a bug of airdrops, but your goal as a developer is to structure it in a way where you can learn rapidly and improve your product. So coming out of it, your product is not just as good as other products, it's better, and that people want to keep engaging with your product over time. One last point is, you also, I think, should continue seasons of smaller sets of rewards. So that way, if you're launching a new feature, you can have some amount of rewards available to continue to test over time. But eventually your product will need to sustain real demand. You eventually run out of token supply and can't keep fundamentally airdropping tokens.
That was really well put. But just to add, when I worked with Friends with Benefits, which is now a portfolio company, it's a decentralized organization for those who are unfamiliar. FWB essentially airdropped tokens to people based on their engagement. And so you had to actually contribute to this community to continue to get the airdrops and to continue to stay in the community. So it's the same kind of idea of, if you have a really robust product, which in this case, the product was the people. If you have a really robust product and people like it, they will continue to be invested in it. Obviously, things have changed a lot since that era of FWB, but early on, people weren't really selling anything. They were holding because they wanted to continue to actually be part of the community and actually grow with the community. And so plus one to everything that you said. And I can't wait to read that report. Yeah, I'm really excited for it.
Yeah, sounds like a really fun report. I think the only thing I'll add is to be opinionated with why you are doing a token. And there's no judgment. Some people do it for early liquidity. And I think the other option is acquisition. And the third one I would call more like utility based, where like the token is fundamentally important to run the network. If you're on the acquisition part, like you need to be thoughtful and treat it like a budget, right? Like you need to be extremely smart about where demand and supply is coming from. What are you going to use it for, right? And I think you've seen, and like again, like yes, it's a really good tool for acquisition. It can be a really good tool for retention, but there's a CAC LTV ratio. Like these things haven't disappeared in crypto businesses. And I think the ones that have successfully done it have been very smart about how they use supply to acquire the right types of customers, as Carl said, and keep them more engaged. And the third one's also very interesting. It's like, how do you actually keep it part of your product? Like I think like Blur, for example, gets a lot of like, I thought their tokenomics was very interesting compared to like other ones NFT marketplaces that did it before, where they incentivized volume, for example. And that just led to a lot of like farming and wash trading and a lot of things there. Blur was interesting because you only got rewarded if you were top of order books, so you're taking some risk. And so they were using it to incentivize liquidity. And I thought that was actually a very clever tokenomic design to do it. And so I think as you, like, I don't know how many founders and builders and things are there. I like one thing we encourage is like the token is part of your product, right? And I think oftentimes the risk becomes that it becomes a separate product that's not associated with your thing, and then people are just playing the token game and stuff like that, and that's fine, but it doesn't translate into actual uses for what you're doing. I think this points phenomenon is actually interesting results of this. I often talk to founders and sometimes like they get depressed because they're like, oh, I think our project is not succeeding because we don't have a token. And oftentimes it's because your project doesn't have product market fit. And that's really, really hard to get. And I think points programs will help people discover that it's actually not the tokens or points. It's actually like you don't have the core mechanics really done, and you should go focus on what is your core product value prop in some ways. And so like, yes, it's a very, very powerful weapon. I think it's actually very core to what's interesting in the space. But something to be very thoughtful about, and like, you don't have to go with what everyone else is doing. I think the most innovative protocols and products think about things in a new way to do that. That is actually very native and new to what they do.
Awesome. Yeah, so we can touch back on that meme coin point. Where do you think meme coins fit into the crypto ecosystem?
I think we actually were at dinner last night. We were talking about this. I was at a dinner with some other friends that are non-crypto native, and we were talking about like crypto tokens, like what's going on here. And I told them like, hey, there's two different tokens. If I was like pitching both these tokens, which would you want? One is a really cool restaking protocol with an AVS associated with it that can then be used to secure economic value for an oracle. Like if you're trying to explain that to your friends, they're like, okay, what does it mean? Should I buy it or not? Versus like, hey, here's a meme of a Costco hot dog. And Costco hot dog is an inflation hedge. It's an RWA. It's been $1.50 for 30 years. And there's a token in a community that's aiming to get this token to be worth $1.50. And oh, by the way, the founder of Costco is named Sol Price. Like that is something that people get and want to be a part of. So to me, I think meme coins are just simply fun, right? I think they're a fun way to get new people into crypto. They're a fun way for people to speculate. The other thing is meme coins have a really like serious wealth effect associated with them. Like Polymarket is a great product. It's like super easy to use. It's like really clear. But like if you're betting on something like the election outcome in 8 months or 7 months, whatever it is, like you're probably not even going to double your money in most cases. So is that really more interesting and like from an engagement perspective, or is it, hey, I'm buying this Geo Bowden token that basically is a meme of the president, and like there's constant content coming out from the community about this token. And so instead of betting on the actual physical outcome, you're betting on the attention that a particular person is going to get or a particular meme community is going to be able to drive. And so from that perspective, because of the wealth effect, the fun, it's easy for people to understand. I just think it's a great tool to onboard many, many people into crypto. Obviously, like there's dangers where if you put your whole net worth in a meme coin, it goes to zero. Like, well, yeah, like you shouldn't do that. But you also shouldn't put all your money on, I don't know.
What if it goes up?
You shouldn't put all your money on the Philadelphia Eagles winning the Super Bowl because they're not going to in that year. And so it's like as long as people are sensible and approach it in the right context, they're a fantastic tool to get people onto the network.
Yeah, I think meme coins are great personally. But the thing that really stood out to me with this entire episode that we're in the midst of is meme coins are not that different from NFTs. They're at their core like a very similar idea. I think what's really interesting about meme coins is that the references and the context is a lot more mainstream. Right, instead of creating Bored Apes, we're memeing, Joe Biden, and so I think that does appeal to a greater number of people, which is great because culture, it's referenceable, it's infusing crypto and culture, which hasn't really happened meaningfully yet. And I think that's a really, really important point, is that because it's a meme, it's getting a lot of attention, and again, we can use these memes on Farcaster. We could potentially at some point use them on Twitter. We can, we're basically seeing what it can actually be once the rails for a lot of these social products are on chain. And I think that's really exciting, even though right now it's a huge mess of just a lot of gambling, more or less. I think you should be optimistic about the cultural aspect because that's how people relate to technology now. And it means that there's, I think, a lot more opportunity for people to capture that attention and meaningfully like create products that can actually sustain themselves beyond an NFT community that has utility, but the leaders basically have disappeared and now you're holding the bag.
Meme coins are funny because I think it's very easy to like over intellectualize it or like overly dismiss it. And I agree what Carl said, like they're very fun. I like meme coins, they're really fun to do it. The NFT point's actually very interesting. I was talking to, there's a meme coin on Farcaster called Higher, and I was talking to one of the members of the team behind it. And he had this really interesting point. He was like an ex-Nouns member. And he's like, oh yeah, I'm trying to build this community, but if you actually have, if the only tool you have to get people to do stuff, build memes or anything like that is an NFT, and now it's at that point was, well, this is before Rage Quit and everything like that, is very expensive. It's very hard to reward someone with a single NFT, but like rewarding someone with like an ERC20 is a lot actually easier. And so that was a very interesting perspective from someone who's like a good community builder on like the power of something like this in some ways. Where I think like, again, I think the question is, okay, what is the same power? I think they're very fun. They're very good tests of the technology in some ways. I think if you're a founder builder, right, I think they're very interesting go-to-markets. I'm more curious to see if you see the reverse. Historically, you don't really see many examples of communities that back into like a very strong technology product, which is, at least personally, is something that I'm probably most interested in. But I do think the reverse is very true, right? I think you can have like a strong product and then you build a community around it, and that ends up being a go-to-market. You look at Reddit or anything like that. And so I think it's powerful as a go-to-market in some ways. I think there will be some projects that will like try to back into a product, and I think they will struggle because as it's really hard to find product market fit. It's like, frankly, it's like really, really difficult to do that. But as a go-to-market, it's pretty interesting as to capture people's attention.
You know, I want to build on one of the points you made. You said like meme coins are an easy on-ramp, and I think one of the things that shouldn't be underemphasized is the fact that you can buy a meme coin and enter a community for $1. If you think about like Bored Apes as an example, hey, like this is really cool, you should get into crypto. Oh, you have to spend $50,000. What? Like, and by the way, if you want to expand the community beyond the 10,000 or whatever your PFP collection is, well, then you need to launch another community, like another like lower set. But then people are like have this inferiority complex where I can't afford the upper one, I'm in the younger one, and then you're just increasing the supply over time. Right? With a meme coin, you can buy $1 worth of it. And like you can say you're in, and then you can increase and have fun over time. But it's a really, it's like an easy on-ramp for people as well from a financial perspective. And, you know, it's talking about like NFTs. There's like a new standard that's being developed called 404. Like you might hear the term 404s. It's basically hybrid between NFTs and fungible tokens. And to me, like my hot take is and we might talk about this later, but like teaser is that this is going to revolutionize both meme coins and gaming in almost every sector over time. Because now you get the benefits of fungibility and the ability to have an easy on-ramp. But if you're a large holder, you now have a unique way to represent yourself in the form of an NFT and swap into and out of that over time. And so I think it's going to be a really powerful evolution in the crypto space over the next, call it 1 year.
One thing I think you said really well is that you're not a second-class citizen, because you saw a lot of fractionalization of NFTs, and it'd be like, oh, like here's an ERC20 and it's like a fraction of a Bored Ape, and people thought it on board, but you kind of are inferior there. You don't have a full NFT in that way. And so I think that nature of not being second class is also pretty interesting.
Yeah, we can do the hot takes then. Yeah, so what are your guys' contrarian opinions or hot takes?
I already shared mine. I think 404s are going to, again, like be a major step change, and it's going to be mainly adopted, I think, in meme coins and gaming. I think gaming, because if you're a game designer today, you might have a governance token, and you have what I'll say like a spending token, and then you have all these different NFT assets you need to create. And it creates a lot of complexity if you're a game designer to have all these different assets interacting together. Now, in some ways, that's a feature, because the more complex your ecosystem is, the harder it is for people to arbitrage that system, because by definition, it's more complex. It has more facets to it. But generally, it also means that it's also harder for you to design a really effective game as a game designer. Versus, I think 404 has enabled people to have a really easy framework to go into and out of an asset, into a token, into a currency, into an asset, without needing to, and like simplifying the infrastructure a lot. So I think 404s are a really fantastic idea. And again, one of the other things you get into with 404, like kind of like NFTs, is like if people develop an NFT, there's always a demand for the founders to do more. Like people today on Bored Apes, we need to have other side. We need to have the next thing. And it's like, there needs to be a roadmap associated with it. But again, like meme coins are, hey, like there's no strategy for GeoBinance. It's just a community that people that decided to go pursue this. I think 404s can start to give you some of the benefits of both without being locked into this never ending roadmap that you do get in some of the NFT communities.
Is this recorded? Just kidding. I don't know if this is a full hot take. I'm pretty suspicious on a lot of the crypto X AI kind of hype, and it kind of reminds me a little bit of like the metaverse hype, and I don't know. I like, what does that mean in some ways? And I'm always more curious on like, okay, what is the underlying thing? Like if you're doing something AI, okay, it's like AIs. What are they actually? Right? They're like LMs based on a transformer-based architecture. What's actually unique about them? What's necessary in the supply chain? And so sometimes I feel like you don't get enough depth on either one of the sides, on the more crypto side or on the AI side of some of these things. So that's why I've like, I for sure think there's interesting stuff there, and I think there will be moments. And I think like one thing I've been pretty excited by is like seeing like token valued accounts in NFTs, and I think you actually have like a very interesting case where you might have like I saw someone give a pitch recently where it's like you like talk to an LLM and you pay it in a token, but it goes into, there's an NFT associated with that, and then NFT has a wallet, which is what token bound accounts are, and there's some, and you can trade that, and it ends up being like this piece of software that does work for you. And actually like that, some parts of those are very, very interesting, like consumer behavior seeing emerge. Some of the other stuff I'm a little suspicious on as much, or I'm not convinced there's as much demand, right? I think there's a lot of people trying to do like go for these compute networks, and I guess everyone needs some of these computes, but that's also like your alternative is actually like very sophisticated projects like Together, and there's a bunch of other places there. And so I think the question is always like, how are you 10x better than kind of what the alternatives really are? So it's one of those things which is like, I think it's not dismissive of the category. I think there's a lot of interesting stuff, but like you need to go 2-3 levels deeper onto like what actually matters here and what has staying power, instead of like, let's combine a bunch of buzzwords and see what happens.
Yeah, my hot take isn't, it could be startup related, but I think that Cash App is one of the most important crypto companies out there. The work that they've done with merchants and the work that they've done with consumers in terms of getting, at this point it's Bitcoin, but Bitcoin into wallets, I think is really, really, really like under the radar. I don't think a lot of people talk about it. I mean, sure, it is Bitcoin and not necessarily Ethereum, but there's a lot of notes that I think builders could take from like the work that team has done. So I would say that's probably my hot take, especially when it comes to like payments. I have other hot takes on payments that I don't think I'm going to share, but thinking about, you know, stable coins and cross-border payments and things of that nature, I'm hoping to see like a lot more companies that are working on that ex-US, because obviously Cash App is, you know, wish list they could be everywhere, but they really can't. But yeah, that's my hot take. It's Cash App is honestly one of the most important crypto companies out there, and nobody talks about it.
Do you know if Cash App is adding support for Lightning Network?
I think they already did. Yeah, they did that years ago.
Yeah, Lightning is interesting. I didn't realize that they did like 12 million transactions last year. That's like actually, I think there's a lot of, everyone falls in and out of Lightning, and there's actually a lot of issues in their technical design, but it's actually very interesting that it's starting to get some adoption.
Yeah, I mean, I think they do like 66 million in revenue just off Bitcoin transactions a month or something like that.
Is that like on and off ramps probably? Or even like sending it?
Yeah. But anyway.
Awesome. Well, I think we're almost at time. So thank you all for being here today, and thank you for the panelists for speaking. If you're interested in the venture space, we will be having our first demo day upstairs in 15 minutes. So please feel free to stop by. But otherwise, thank you all for being here, and I hope you have a good day.
Thank you for moderating.
Thank you so much. Thank you, Yusuf.